please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Right, Udayan Mukherjee to the conversation. Good morning, Udayan. Good to have you with us as always. A lot happened last week, especially on Friday with the way the markets fell. We had lots of political news, TDP walkout, by-poll results. Interpret it for us.
Morning, Lata. I think we are very close to that support level again around 10,100. So the market might just about mark time out here. I don't know whether we've got enough momentum now, having fallen quite a bit last week, to slice through that level, because everybody would be watching that, and that has assumed a lot of importance, whether you call it the 200-day average or that old support of 10,000, 10,100. I think it's quite symbolic. So I think a lot of it would depend on what kind of domestic institutional numbers we get over the next few days, because that was a big disappointment on Friday, the fact that we got a sell figure from the DIIs. So the next 15 days are quite crucial as we head towards 31st of May, because if it is likely that mutual funds need to sell to give out dividends to avoid capital gains tax in the next couple of weeks, and that puts some technical pressure on the market, then that level of 10,000, 10,100 might be difficult to hold out. So let's see how the liquidity considerations play out over the next fortnight. Otherwise, the markets might just about trade in some very sideways kind of movement unless we have some big global triggers over the next few days.
Udayan, hi, good morning. You spoke about the possibility of technical pressures, but what about politics? I mean, the message from, the UP and Bihar by-elections is that the road to 2019 could be much tougher than what we saw in 2014. Is that something that the market is pricing in?
It has started pricing in. I don't know if it's all in the price, but we were discussing this on the day after the Tripura results or the northeastern results, that it will be a ping-pong kind of a game on politics throughout this year. You'll get one good result, the market will feel happy. Then you'll have a setback and the market will start sulking. But I don't see a clean run on the basis of politics throughout the course of the year. But you're right in pointing out that some amount of pricing in has started to happen, because it appears now that if the coalition of the opposition parties try to cobble up some kind of coalition at the state level, then the road to 2019 could be difficult, and it's not a given that the BJP will get, or even the NDA will get, a simple majority in parliament, and that certainly is a risk, or a perceived risk, by the market. Clearly Friday there was a role of that in the sharp sell-off that we saw, and if this kind of news flow continues, it's conceivable that we see sub 10,000 levels in the foreseeable future.
Well then, good morning. What about the global cues? Every week there's something from Donald Trump these days. Do you think the market has significant risks on that count?
There are many risks floating around, Anuj. You don't know which one will snowball into a major crisis. These are simmering risks. Politics, global headwinds which are coming in either from the Fed or from Donald Trump, this whole interest rate situation, all of these are simmering risks for the market, which is why you've had the first major leg of correction from 11,200 to 10,200. It's a sharp fall, it's a 1,000-point Nifty fall, but if any of these risks that we are talking about assume slightly more menacing proportions, then you could see a next leg of the fall, which could be another 500-700 points on the Nifty. So I think people would be doing the right thing in being a bit cautious at this point in time, not to rush in and say 10,100 is the final bottom for 2018, because the very first sight of many of these risks has precipitated a 1,000-point correction, and as these risks sort of deepen their roots, you could see another leg sometime in the course of the year. Will that happen this month? That is difficult to predict. You could have a period of consolidation and then the next leg down, but that risk is open and people should be cognizant of it.
Okay. Well, we still have a minute, Udayan. It's a new Fed chairman. Fed meeting this week. And of course, great job numbers. This, as Anuj was saying, normally it is good to buy going into the Fed when it was Yellen's Fed. Now, how would you interpret?
I doubt whether the Fed will do anything to roil market sentiment. I think the Fed is also cognizant that there are other risks which have come to the fore with all this talk of a trade war. Markets have not fallen a lot, but they're edgy. There's no question about that. At this point, to inject volatility by saying we'll raise rates 4 times during the course of the year is something which the US central bank will probably not do. So it'll probably be a non-event. Markets will just probably ignore it and move on. So I don't see that being the source of major volatility this week. But more news on the trade war front is certainly a clear and present danger, because Trump is inherently unpredictable and you don't know what will blow up in your face.